Hey, good afternoon. It's John Gillen from Newswire at Stansberry Research. I am here with Carlo Cannell from Cannell Capital. It is a pleasure to welcome you in. Your presentation was fantastic and hilarious.
Thank you.
Folks really need to reach out and see that. And some things I took away, valuation shorts, and shorts, of course, can be treacherous, but frenzies have life cycles. I loved when you talked about who remembers Ebola stocks, blockchain, and then growing weed in Canada, which is just as ironic as they come. So let's talk a little bit about that. Shorts can be root canal. You've got to hold on for an awfully long time to be right, but some of the things you've seen that are just mind-boggling to you.
They're mind-boggling, and also they're very funny,
Yeah.
you know, and I know that this may not seem very scientific, and it's not, but the way I just describe the good shorts is often if you can get the other party to laugh. If I'm telling you about a situation and it's so ridiculous that the other party just breaks out in laughter, you're probably onto something. Whereas in the case of NVIDIA, one of the questions that I fielded during the presentation, nobody laughs about NVIDIA. They might question the valuation, they might question the growth rate and competition and so forth, but there's not a lot of peals of laughter. Where some of the companies that I discuss, such as Vivus and some of the other companies, it's just, in hindsight, how ridiculous. How could that possibly exist? And that's kind of what I'm looking for.
The funniest that I've come across in years was, of course, General Electric.
Mm-hmm.
Porter started talking about this in the high 20s. And, you know, the absurd financial machinations, but also two jets immelt.
Right.
CEO, well, yeah, I've got my jet, but I've got to have a backup jet because in case this one breaks down.
Right.
So how is that ever going to be a successful company, and of course something that we can all laugh about?
Right. That's headed in the direction that I prefer to troll in, but it's still too pristine a company. I'm looking for the absolute, just, you know, ridiculous. I mentioned the paging company, which achieved a multi-billion-dollar valuation. That's kind of the stuff I'm looking for, just the very obvious things. And of course, we look back, and when is the last time you purchased a pager or you paged anybody? And, right, so you're laughing. So that's the point right there. So that's what I'm looking for.
Yeah, yeah. And just getting back on the whole marijuana theme, and what I loved, and I could tell you weren't you said you were no expert on marijuana. I know it's just because I didn't see you in a knit hat, and you've actually bathed. And you know, back to these incredible valuations. Tilray, you mentioned the valuation got to what?
I don't know. Well, I was referring to Canopy because I know Canopy more than Tilray.
Right.
They probably achieved similar levels of valuation, but I only mentioned Canopy because I know some of the numbers off the top of my head. And I think it was the valuation implied upon Constellation Brands' investment into Canopy was approximately $30 billion. It's complex because there are different tranches of warrants. And I just compared that to a company doing last year, I think 80 million of revenues, agricultural company, which is basically what marijuana cultivation is. There are a few publicly traded agricultural companies, and they don't have anywhere near these type of valuations. They trade at best maybe 2 times revenues, which would imply a stock price that would be down 97% of Canopy.
97%.
But I don't have any exposure there. I'm more interested in the third tier companies. I think that's more attractive, and it's more consistent with my comparative advantage.
Right. Well, you've lived through .com, you've lived through Bitcoin at 20,000. So the question is, this juncture in the market, do you think we'll see a final rally in the market before this debt-fueled mania kind of blows off?
Yeah, I don't know. I try to position my portfolio where I am not in the general middle part of the market. So if you short a dying company, that it can be established, it has a limited amount of longevity, and you buy something like Cavco, which is the manufactured housing company to which I spoke,
right,
and you proportion them, and that's key. And I don't really know, I haven't figured out in 26 years how to exactly have that mix. But if you do that, in theory, you shouldn't care about the market, because you know that the patient on the oncology ward sadly will expire, and the other company will gradually prosper, like some of the companies that Porter mentioned, like Hershey's. right? Hershey's may decline in value, but the slope of decline in a market correction is going to be nowhere near the decline of all these other companies that will disappear.
Right.
That's what's supposed to happen. The problem is getting that ratio tuned is often difficult.
And a capital-efficient portfolio, which is going to stand the test of time.
Right.
But of course, this juncture we're in now, where we've seen stranger things happen than an enormous rally. I would have never pinned the Dow at 25,000. I just
Yeah.
wouldn't have thought of it. I would have never thought about $1 trillion company in Apple. I certainly understand it. The math seems reasonable at this point. So our friend and colleague, Dr. Steve Sugarroot, who has done the work on a massive melt-up, and
It could happen, or there could be something there could be a meltdown. I mean, one of his colleagues, one of your colleagues, spoke to the credit bubble and so forth, and you look at it and you say that's very compelling, but that argument has existed for many years.
yeah, it sure has.
So why now, right? Why now? I don't know, and that's why I prefer to be in my habitat, is because I don't need to time that. I'm short and I'm long. Right? I lose money on the shorts in certain years, right? But I'm making more money in the longs, and so on a net basis, the idea is to produce above average market returns.
Okay.
So it's my business is one where you always have a headache every single day, right? I happen to be short Tesla. Last Friday was a good day to be short. Today's not, but I have the balance.
Right.
I have the balance, and that's it's not for everybody, but it works for me.
Can you imagine, as intelligent a guy as Mr. Musk is, he's now got a babysitter. And he paid a $20 million babysitting charge. So just curious.
Well, 40 million.
Oh, it's 40. Okay.
Yeah, it's 20 from the company, 20 from him. But more importantly,
It's a rounding error.
it dramatically strengthens the argument of the many, many class action lawsuits against him. It's basically validating their case.
Right.
And the Department of Justice is definitely, in my opinion, revved up, and that's going to be much larger. And his whole credibility has been questioned. So I mentioned in the presentation what happened to all of this hoopla about the tiles, the solar tiles. There's like no traction. It's not like they're missing the forecast. It's like nothing. It's almost like you could say that was fraud. Or the battery pack, like that was a huge deal and a huge product launch and everything. It's like no traction.
Did you buy a flamethrower?
I did not buy a flamethrower. I think they sold out.
Indeed. Well, it's a pleasure to meet you, talk with you, and thanks for taking the time at Stansberry Research, and we'll have you back.
Yeah, thank you.
Great to see you.
Pleasure.
All the best. Thanks, guys. If you're enjoying these videos, don't forget to press the like button. Comment down below, and if you're new here, please don't forget to subscribe. And remember to click that bell to be sure you don't miss out on our newest updates. And thanks a lot.